Welcome to We Get Work and the Year Ahead 2025 podcast series. This year, our special report and corresponding podcast series are created to help you move forward steadily, seamlessly, and successfully in a workplace law environment in persistent flux. Jackson Lewis invites you and others at your organization to experience the report's legislative, regulatory, and litigation insights in full at our website, jacksonlewis.com, or listen to the podcast series on whichever platform you turn to for compelling content.
Hi, everyone. Thanks for joining us. My name is Justin Barnes. I'm a principal in the Atlanta office of Jackson Lewis. I am joined here by my colleague, Eric Magnus, who's also a principal in the Atlanta office of Jackson Lewis. And we're going to be talking to you about the year ahead as it relates to wage and hour law. And Eric, we've seen a lot of action, not just this year, but in recent years as it relates to the wage and hour laws, haven't we?
Indeed, we have. Yeah, the past six months, the second half of 2024 was particularly eventful. We've seen, I think, what you and I are calling back to the future basically take place now. We saw two levels of a salary increase to the federal minimum required for the white collar exemptions. We saw one proposed in July that actually went into effect, and then another one that was proposed to go into effect on January 1 of 2025. And then we saw the courts completely kill all of those increases. And we are now at the point where the Northern District of Texas's decision undoing the salary or vacating the salary increases is now on appeal to the Fifth Circuit. I don't think that any of us expect that appeal will survive the new administration coming in on January 20th of next year. The appeal will likely get withdrawn, and we will be back to the law as it has been for the last 4 years, which is a minimum salary of $684 per week, which is $35,563 per year. And it's as if nothing happened. What are your feelings about what we've seen over the last year?
Yeah, Eric, I agree. It's back to the future. I've been calling it deja vu all over again. This is like 2016 all over again. We saw the exact same thing happen in 2016 when the Obama administration tried to increase the salary thresholds under the FLSA, and then federal judge in Texas blocked that. So same thing is happening now. And I suspect, if I had to read my crystal ball, the same thing is going to happen in 2025 that we saw in 2017 out of the first Trump administration. I think that the Trump administration will not necessarily withdraw the appeal, because the current administration has appealed the decision to vacate the salary threshold rule. I don't think we'll see the Trump administration withdraw their appeal, because they do probably want to preserve their rulemaking authority. But I think that we're probably going to see the new DOL under the new administration ask for a stay of that appeal, say that they're going to issue their own rule, then issue their own rule, which largely goes back to the status quo prior to July 1st, maybe with some updates to keep up with inflation. But that's exactly what happened in 2017. That's what I expect to happen in 2025 is that the Biden rule will never go into effect, and it'll get replaced by a new rule issued by the Trump administration. So if I had to read my crystal ball, that's what's going to happen. Another interesting thing that's come up, Eric, is very important to the restaurant and hospitality industry and other industries that rely on use of the tip credit and have a lot of tipped employees. And that's the 80-20 rule. Or as I noted recently, I guess they didn't feel like there was enough numbers in there, so they added 30, became known as the 80-20-30 rule. Tell us about that rule, Eric, and what's happened to that and what you think is going to happen in the new year with the 80-20-30 rule.
Yes, so let's call this Back to the Future too.
Great movie.
Great movie. Yeah. The history of the 80-20 rule, which is the rule purporting to limit the amount of time that a tipped employee can spend performing duties that are not related to the earning of tips. The history of this rule goes back to 1988, and it is about as tortured as it gets. Until 2021, the rule was never elevated above sub-regulatory guidance and the Department of Labor's Field Operations Handbook. But that sub-regulatory guidance alone got a lot of traction in the courts and was supported by every Democratic administration that has been around since the 90s and was not supported by every Republican administration. So we have had flip-flopping on the Department of Labor's view of the viability of the 80-20 rule since 1988. So the Biden administration did what was a natural conclusion of trying to get the rule out of sub-regulatory guidance and proposed an actual rule the way you're supposed to promulgate actual rules, which was giving notice and comment on a final rule, and that it went through that entire process. The rule was promulgated, and not surprisingly, the rule was challenged. The 2021 final rule formalized the 80-20 rule, but also added, as Justin referred to, the 30-minute rule. The 30-minute rule is a separate rule that says that any period of 30 minutes or more in which a tipped employee is performing duties not related to the earning of tips must be paid a minimum wage, even if it doesn't breach the 20% rule. Well, this rule was challenged, and like the salary rule that we talked about, the rule has now been vacated. The 2021 rule was determined to be not a valid interpretation of what the dual jobs regulation. The dual jobs regulation is the only actual pre-existing regulatory guidance there is on this, and the dual jobs regulation merely holds that somebody in a tip job when doing non-tipped work should be paid at minimum wage. But the Fifth Circuit has now ruled that the 80-20 rule and the 30-minute rule are not valid interpretations of the dual jobs regulation, and so the status of now that the rule is vacated is that we are back to the position that we were in prior to the issuance of the 2021 rule. Now, the complicating factor here is, in the interim, hopefully everyone listening to this knows that the Supreme Court this past year ruled in the Loper decision. The Loper decision held that overturned the historical doctrine of Chevron deference and held that courts should not be deferring to agency interpretations, which would include, relevantly here, the Department of Labor's interpretations of unclear statutory guidance. Well, the interesting thing here is that the pre-existing law to the 2021 final regulation, nearly all of it that adopts the 80-20 rule, is based on deference to the Department of Labor's opinion under Chevron. So it is a very, very open question as to the viability of the pre-existing 2021 case law, which will just have to be shaken out in courts. As not surprisingly to anyone listening to this, our position is that the 80-20 rule is totally based on deference to the Department of Labor and should be abrogated because it is not a sensical interpretation of the regulations in the first place. But this issue will have to be shaken out in the courts. So that was a long-winded answer. But Justin, what are your thoughts about that?
Yeah, I agree with you, Eric. I think that we go back to where we started before the 80-20-30 regulation was introduced, with the added instruction and benefit of the Supreme Court's decision in Loper. So very much uncharted territory right now in terms of where that rule lies, but totally agree with your interpretation.
To change the subject here, what do you think the prospects are? We've seen a lot of state law minimum wage movement, but what do you think the prospects are of national movement off the $7.25 minimum wage?
That's a great question, Eric. I think that really there are sort of two tracks that I see this going. One, as many people probably know, under the Obama administration, there was an executive order which increased the minimum wage for federal contractors. The Biden administration then tried to increase that minimum wage for federal contractors, and there's been a lot of litigation over that. Courts have gone both ways on whether the executive order increasing the minimum wage for federal contractors is lawful. And we expect the Trump administration to issue a new executive order fairly quickly after President Trump takes office. Now, that's on the federal contractor side. On the non-contractor side and the $7.25 minimum wage, what's interesting about that is typically you would think in a Republican administration that's not going to get increased. But we have heard President-elect Trump and his campaign talk a lot, not just in this election, but also in his prior elections, about increasing the minimum wage. I think there is an appetite to increase the minimum wage beyond the current $7.25 level. Now, that would take congressional action. The $7.25 minimum wage is built into the FLSA, the statute itself, so Congress would have to take action. But I do think that if President Trump strongly supports an increase in the federal minimum wage, that Congress would follow suit and approve that. To be clear, even if that does happen, I don't think we'll see a drastic increase, but I think we could see some increase just given some of the populist comments that have come out of the Trump camp on this particular issue.
So a corollary issue on the, now that you mentioned the populist instincts of President Trump, is this issue about removing taxes on tips. This is something that could certainly happen in 2025. And it would be, I think, the most important effect it would have on the wage and hour practice is the entire time I have been practicing in this area, Justin and I and other practitioners like us have advised a lot of restaurants on ways to not have to deal with the tip credit, like service charge models or the 7I exemption that got opened up a few years ago to banquet servers and those kind of positions. If Congress ceases taxation of tips, I think we will see all of that work eviscerate. Nearly every restaurant will go back to the normal tip model because the employees will demand it because they won't be paying taxes on tips anymore. So that is certainly something we could see in the year in the head that would be very interesting.
I think that's right, Eric. And I think there are other initiatives that we could see coming out of the new Trump administration that could have an impact on wage and hour laws as well. In addition to eliminating the tax on tips, there's also been talk out of the Trump campaign and the Trump transition team about eliminating tax on overtime wages as well. And also the concept of allowing employers to use comp time in lieu of overtime. Currently, only public employers, government employers can pay comp time in lieu of overtime under the FLSA. But there's been talk of amending the FLSA to allow employers to use comp time in lieu of overtime payments to pay for overtime. So we could see some significant changes to the FLSA, and I could certainly see if this comp time change were to be made, for example, for there also to be a corollary increase in the minimum wage in one fell swoop, where we see some changes to the FLSA that can be touted as being employee friendly and supporting employees. So everyone should stay tuned in the new year, particularly after the inauguration, to see what comes out of the DOL and what comes out of the Trump administration in the context of wage and hour laws. We certainly will, and we'll keep you updated as those come in. Thanks for joining us.
Thank you for joining us for the Year Ahead 2025 Special Edition podcast series. Please tune in to future episodes where we will continue to tell you not only what's legal, but what is effective. Our We Get Work podcast is available to stream and subscribe on Apple, Spotify, and YouTube, as well as jacksonlewis.com. If you enjoyed these episodes, we encourage you to share any or all of them with your network and leave a review to help others find us. We would love to hear your suggestions for future topics, or if you're interested in being a guest on our show. Please reach out to us at weatwork@jacksonlewis.com. Thank you for tuning in.